following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. Hope you're doing well. Hope you had a good weekend. Want to show you something first off the bat here. These are barred rock hens in chick phase, of course. Cute little guys. Really hardy chickens. Gonna reload some things this week. The springtime is, if you guys don't know anything about that, the springtime is when you're supposed to start these guys, and that's getting about 20 of those is it's going to be a three-ring circus around here. So let's take a look at the S&Ps. All right, so as we look at this, we talked about trying to allow this thing to get below 2350, 150. That hasn't happened. We're opening up pretty much unchanged this morning. And, you know, a friend of mine was asking, what do you do with this? Do you buy this support here around 2350, 150? The breath's real positive, and, you know, could we be off to the races again? I actually advised against that. I thought the risk was to try to still be long up here. So we were looking for a daily close below this area. That didn't happen. So be it. That's okay. There's other instruments to trade and other instruments to try to get some edge on and the focus on the S&P. So when you look at this, and we're trading 2362, 63 right now, what do you do with it? Here's the 240s. There's the bottom of your profile in the 240s, 2355. Top of the profile, 2366, rounded off. So those are the only inflection points right now you can pay attention to other than the 2351.50. And what do I advise doing? I can't buy it up here, and I can't short it until we get some technical damage, at least rolling back into the box below 2351.50. So the short answer is do nothing. You know, those little chicks are really cute, but man, they end up at some point turning into greedy adult chickens. It's amazing to watch that transformation. Let's take a look at crude oil here. And somebody was asking in the den, do those things come in the mail? Actually, you can order some really weird chickens, really weird breeds, not very common, that lay blue eggs, green eggs, all kinds of things. But I picked these up at a local, still in business hardware store called P.O. Woodard. It's been. I mean, I think they started in the 20s, and it's kind of just a cool place to go. And they get some different breeds. And this is actually a pretty common breed I showed earlier, called Barred Plymouth Rock, I think is the full name. They're kind of black and white speckled, very pretty chicken, but I got them this time because they're supposed to be really docile relative to what I got out there now. And so they're supposed to be just almost like pets. So interested to see how that works out, but also prolific egg layers. So, all right, taking a look at crude oil. 52.43 support on the long term, still the case. Always looking at the dollar to look at this trade. We reached that 55.06 last week twice. Interesting how that backed off those inflection points almost immediately. But, you know, because we keep testing this area, and if you look at this, is this a long profile or what that's been enforced forever on crude on the daily? Kind of like the weekly. I mean, this is, to be enforced for over 3 months, or excuse me, 2.5 months on a daily profile is just flat out improbable. So as we look at this, one of the things that comes to mind is as we continue to bounce around within this profile, the breakout on this is where you kind of put the risk reward scenario on the table and really try to focus on a long-term change in tone or breakout or breakdown. Breakdowns would obviously be getting below 52.43 on the weekly and closing within the profile, and then you'd probably see 48.67. But if you look at this daily and we start getting breakouts above daily profiles, I know we did that before and kind of reversed back in the profile and did some damage there, but you got to play the odds here. This profile's been enforced for a long time, and it's not exactly that wide of a profile. So I'd love to, what would be really cool is to, if we don't break out anytime soon, is to see a profile kind of pinch in, kind of like an inside profile, kind of like an inside bar type scenario, and then even get tighter, and then the breakout on the upside will probably be something you'd want to put more of a position size on. But right now, this profile being enforced for a long time, that usually indicates the breakout's going to be a little more impacting, and I'd love to see a breakout on the upside because I've kind of blocked out the short side on this trade and just used the targets on the upside as targets, not short opportunities. Actually, you know what? Somebody was saying in the den, I think Tom was saying that on the chickens. You can actually get a full-blown harvestable chicken on the meat side in about 7-8 weeks. It's amazing how fast these things grow. But on the laying side, you usually need about 17-18 weeks for them to start laying eggs, which is also truly amazing. You can almost watch them grow. I mean, you come in, it's almost like they grow 10-20% a day. It's astonishing. Let's take a look at gold here. All right. So last week we talked about 1236 being a support on this and clean and clearing 1242. That happened, but let's talk about what's going to happen moving forward. Here's the 240s regulating that trade up, providing two support areas in my opinion, but we'll talk about that when we get back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hey guys, and here's a little cutie, Barred Rock chicks. They don't even look anything like this when they grow up, but very cute guys. All right. Whew. It's amazing they can eat their weight every day. Anyway. All right. So gold, we were taking a look at. This is the 240s on gold. Let me go to the daily here really quick. So, you know, we talked about levering off that 1146 a long time ago and then trying to buy support. So I want to just kind of review this a little bit, show you, you know, sometimes it's okay to base, you know, battle points or entry points, excuse me, around unfair highs and sometimes unfair lows. So what I do is I kind of look at, you know, obviously to trade gold, you got to look at the dollar and some other things going on out there in the stock market in general, and inflation fears and treasuries and blah, 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 blah. So that being said, you know, we'd been blocking out the short side and looking for long opportunities. And, you know, actually, to be honest with you, there was a long opportunity. There was a long opportunity. There's long opportunities. There's long opportunities. And then we trade the breakout. So when we're blocking out the short side, it makes it real easy for somebody who's stupid like me to buy breakouts, buy support, and block out something contra to that. So and Joey had said something that he does quite often, actually. I watched him do this. He'll leave one contract on or even one share in that same direction, no matter if he's, you know, basically just taking off at a target, blocking out one side or the other, just to kind of remind him that that's the direction he's supposed to, that's the MO. So I don't know if you heard that. That was about a year ago when he said that. But gold futures now, the short term 1254 is now support, and then you've got 1240, 49 rounded off. So I don't see a lot of people. I mean, you know, for a reversal, you'd want to see, and we've talked about 1300 on this. It's not possibly going to go there in a straight line. You do have something here we talked about last week, just, you know, something to be aware of. 1262, we've kind of reached that. That's a, you know, this brings to mind something else. These profiles are kind of like an exponential moving average, the way that's calculated. You want to pay attention to the most recent profiles more so than the ones way back when, because they still have this relevance of what's going on in the current profile. So we talked, this is our weekly kind of lines in the sands here. So 1262 and 30, and then you've got something around 1300, which again, that's a psychological kind of whole number barrier type situation for a lot of folks, 1300, and you've also got some recent profile action up there. I like how this is a long-term on gold. I like how this thing kind of got up to these targets. We talked about taking some weight off and then just kind of waiting and seeing. And the more this spun around up here, consolidating, you know, the more attractive this got, especially with what the dollar was doing. So now what do you do with it? So I don't think you change your tone on it at all. I mean, we've been talking about being long gold since 1146. We're about 120 an ounce higher. So that's the drill. We could easily, on a still valid uptrend type move, come back into 1248, 1249. So just be aware of that. But the 1254, 1248, 49 are the two short-term inflection points to pay attention to. All right. Dollar. The dollar, I'm a big fan of this thing revisiting lower numbers. 101.20. It's kind of dived in the box, gone back and retested. I feel really good about this trade, seeing 127.28 down here. You got a really good risk reward right now, in my opinion. And ultimately, I think 99.60. You guys know that, but right now there's the daily, and I love how this thing kind of dived in the box, hit the POC, came back and retested on it for highs. I see this going back to lower numbers. I mean, unmitigated, really. Shanghai, come off a little bit here. Looked at support 2 days ago around 34.55. That happened, and then so I think to back the truck up on the Shanghai is 34.24.25. So if you're trading ETFs relative to the A shares, that's the story there. I don't know if somebody wants me to look at natural gas or not, but I'm going to look at it. Here's the continuous contract on natural gas. This is the weekly. Yeah, I don't trade natural gas. I've only traded it once in my life, and that was enough. Literally one trade in one day. So closing below on a weekly, going back and retesting 27. The only way to really get long this, I think, is to just kind of get back above 27.35, if that's what you're asking. Again, we've kind of gotten down to these numbers down here. It looks like we pierced former lows just to do it, kind of rallied up. The big number, I mean, if I was trading natural gas, I'd base trade around is 27.30 or 2.735. But again, it's tough. It's tough to go long natural gas here unless we get back above that area. The kind of the bad news is for longs is on the daily, you've had a profile appear above price action. You guys watch this show enough, you know that's kind of a bearish sign. We could retrace up a little bit higher, but that's not a good sign. Weekly close back above 27.35 will be awesome. Have you guys been seeing all these new exoplanets they've been finding? I mean, it's like a daily occurrence. I mean, I didn't know this, but I guess red dwarf stars. It sounds like are the most popular. The Milky Way's, that's the most populous star in the Milky Way, and you don't even see them up in the sky. They just found like 3 or 4 planets around a red dwarf star that are supposedly in the Goldilocks area. It's unbelievable. So if we could, that would be, that, and finding another civilization that might unite us here together so we could attack them together. That's what I'm thinking. I'm just kidding. Here we go. Let's talk about stocks. 10-year. All right. The World Alliance. Here we go. The 10-year, we talked really, just blocking out the short side on this one too. This is starting to look really interesting now. We've closed above the daily profiles, kind of coming back. The retest trade's going to be the cool trade here, 125.0708. And your target's above 126.32 on the 10-year. We'll talk about the 30-year when we come back, folks.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Close Encounters. I like it. Remember when that came out? What was the guy in there? Short guy played in Jaws. I forgot his name now. Okay, the 30 year. So the daily on the 30 year. Dreyfus, that's his name. Here we go. Okay, so unfair highs on the 30 year. And you know, this could reverse. So that's the good news is you know where the reversal point and the pain threshold is for the 10 year and the 30 year. Very similar type situation on the 30 year and the 10 year. I hope I'm looking at the 30 year. So, you know, the good news is the market is kind of, you know, Tom and I were talking about this, like, yeah, we can't believe we're talking about going long treasuries here, but the daggone trade showed itself so well to do something like this. Just, you know, just the stock market pausing caused it to go up. I mean, it was almost like a relief valve. But just think what would happen to these things if the market actually came down, you know, the massive pullback of like 20, 30 points. What is that? What is 20, 30 points now? It's not even, well, around 1%, I guess. But I can't believe I'm saying that's a massive pullback. But if we have a pullback, just think what would happen to these things already showing themselves like they had. And really, the 30-year and the 10-year they haven't even done really what they're traditionally supposed to do, which is travel the entire fair auction. There's like a huge support here because that POC is down here on the unfair low. At the same time, there's a blue line that's mapped down here, which is something we don't talk about too often, but it means more of a support line. And that 156.01 could just completely, totally be in order here on the 30-year. And it still be in a downtrend and just kind of doing its kind of backing and filling thing. But on a relative product kind of outlook, looking at the dollar and currencies and blah, 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 I think these things can just go higher just based on that alone. Forget the technicals, just the relativity trade. Yeah. So that's the way that bounces. Yeah, we haven't talked a lot about silver, but silver just kind of scares me sometimes. It does these catch-up trades all of a sudden. But silver, I mean, you look at gold, you look at silver, they're obviously in a pretty good move up here. But how do you trade it right now? So that was the weekly. Here's the daily. We haven't ever really gone back and retested this 1808 area. And the reason I'm saying that is because 1812 is pretty close to it. There's the bottom of the profile on the 240 on silver. Having a little bit of trouble getting through the top of the box this morning. So can gold and silver retrace? We talked about gold retracement points coming down into support, letting the market come to you type thing. This will be the silver area, 1808, 1812. But again, breakouts on the short term above 1839. But I think maybe waiting for a retracement on this might be in order on gold and silver. So that's the numbers. Okay. We're going to hit the XLF really quick. All right. So, and looks like we're printing already this morning, 2442. So here's the XLF, 2387. Breakout, come back and retest on the XLF. Couple of instruments I've been watching, of course, if I could spell. AXP. God dang it. AXP. Here we go. This one, I mean, literally, you haven't even had a close back in the most recent profile, so we're still waiting on this. Just a customary, I mean, look at this thing. Woo. If the XLF gets back in the profile there and kind of has a stake in the ground on the weekly, a lot of these stocks may just come down to support just to do it. So I'm not exactly super excited about buying AXP anymore until the XLF in general kind of does what it wants to do. Let's take a look at JP Morgan. This is short at your own risk. Big support 88.17 on this. This has kind of been the strong of the strong, like the AXPs of the world. And you want to try to pick battles around the long-term inflection points on these type of scenarios, in my opinion. Let's take a look at Apple, give you the Apple update. The other day we talked about maybe this thing, would be able to come down if we had, some migration kind of. This is Friday's action, by the way. If we gap down, we edge down below the unfair lows, unfair highs on this profile. Let me just kind of focus in here. Literally, I was looking at this as a short opportunity myself, 136.27, then had a close above. So all bets are off at the end of the day. This is not what you want to see. You'd love to see that kind of go up in here and just kind of relax back down. And then 134.21 might be in order, but nothing doing here. And this morning, looks like we're trading around 137. So we're basically just trading up and shouldn't be short this thing again. Let's see here. Okay. J&J, I think we talked about this the other day. Really did another move up. No reason to get out of this long yet. I mean, no signs. We'll have a new profile attempt to appear. That'll be a good sign to just scale out of some of it, and then look at maybe re-entering the trade. But here's the MO on J&J. Just the worm turned on this thing, and it turned pretty heavily. Let me get our weekly up. Excuse me. I don't know why it does that. So, let's just go back here. I think the other day we had talked about maybe taking some off around this previous profile high here, but man, what a move past that. This is a good example of leaving some on the table, because you never had any new information appear on the weekly, daily, any type of slowdown, any type of hints of new profiles attempting to appear. But you can't ever go wrong taking some off the table. So you never know what's going to happen with these things. All right, so the XLE, this is kind of interesting here. This is the weekly on the XLE. Got back in the profile, kind of retested, which is what I'm hoping one of the instruments we looked at previously is going to do. And now drifting lower. The weird thing is, we'll talk about that when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, we're going to take a look at the XLE. It's really wild. Crude's holding up. XLE kind of breaking down. Sometimes this product leads gold, or excuse me, crude. Sometimes crude leads this product. You know the deal there. I'm just a little hesitant on shorting this, even though it looks like it may complete the cycle down to kind of like a traditional looking little thing there. Closing the box, which is pretty huge. Fair auction, everything's on the table, and 68.14 may be in order here, but disconnect there. Don't know if I feel like there's a huge edge. Somebody mentioned in the den a while ago, KRE. The exoplanets will allow us to gel as a global community against them, of course. Now you know what I think about in my spare time. KRE. All right, so the regional bank ETF, looking good, but and really had used those inflection points. Looking back on it pretty well. This is long-term weekly on the KRE. So this is okay to be long, not okay to be short still. God, it's just what a move in that business. You know what's really wild is I guess there's so many factors. Banks. That's a great sign when banks are going up at the same time for the market in general. But these treasuries, I'm not so sure that these things aren't going to go higher like we talked about before. And maybe the banks are just saying, yeah, we're going to have some backing and filling, whatever. Big deal. We're looking way out in the future, which they should. The investors of the banking sector are. But if this treasury situation gets, a little testy, and some of the economic, the bank again, the Fed looks at they're just the worst at forecasting ever in the history of organizations. They could, start looking at the latest economic numbers, which are kind of not really numbers that you can forecast over very well, and talk about backing off the raise the rate situation. These guys are like terrified to raise rates, and the banking sector, as you know, can rate people. Charge people more via this the yield curve widening, and I don't know. The banks could be due for a retracement here, but I'd love to see some technical damage first. It's kind of hard for me to continue to buy them up here now, considering what the treasuries are showing. The VIX. Here we go. All right, so I think looking at the VIX right now and looking at the S&Ps, you just don't have any clear-cut signs that anything's reversing. I know the VIX has gotten back above 12 here. Whoop-de-doo. I think it's trading 1203 right now. I'd love to see this thing break above 1463 to start really looking at the technicals on the S&Ps and seeing what the trade actually might be. But I think the way to trade this right now, if you're looking to trade the S&P short, is just to drill into something like this. And I'm showing you the new scanner here. Please don't crash. Okay, thank you. Is to drill into something like this and use some of these custom sorts that are here to try to find, and I promised you guys this is kind of cool how this all, you don't have to click on a bunch of buttons and have things come up, is use something like this to try to find opportunities that you can lever. And what do I mean by that? Instead of going out and short in the S&Ps just flat out, that's a tough draw right now. Try to find stocks that are showing themselves early within the scanner. you guys don't have this version. I want to show you something else too. We put the reason this took a while is we put a beta component in here that ranks every stock beta-wise and also does a real-time today's beta correlation in a performance matrix grid or an opportunity matrix that you can actually look at risk reward scenarios too. So we usually know the targets, or we can find them. We usually know where to put the stops when an opportunity is there. So therefore we can figure out risk reward, and therefore you can actually look at risk reward relative to beta changes relative to the 50-day average of the beta, and then find out what is really the anomaly here of the best. And I can't see how you guys won't like that, so I'm really interested to get that out. But kind of new look and feels, kind of a little bit easier to kind of click around here. But that extra opportunity performance matrix is going to be an extra tab here that just does the math calculations for you relative to beta. Because a lot of times, you know, if a stock's breaking out and the market's breaking out, is that a big deal? I mean, the thing you really want to find is, does a stock have a normal good beta relationship? And is the market kind of sloughing off and the stock breaking out? And those are the hot numbers, as you know. Those are the relativity trades that are just freaking awesome. So I said freaking. So as we look at this product moving forward, I think that's going to be something that, you know, because there's a lot of stocks here that you can kind of find in different opportunity sections of custom sorts, and you can create your own, of course. But if you had something to really distill it down into beta opportunity, beta risk reward, and as a complete degenerate gambler, I would actually go towards the high risk reward relative to beta. So if you start getting a beta intraday, or excuse me, today beta that's negative, you know that breakdown or breakout, you got to look at the relationship there. So we'll do a little seminar or class on that, and I'm pretty excited about it. Pretty excited about getting it in your hands. All right, so all right, let's take a look at the Coca-Cola situation here. I've been a big fan of trying to get short this again. This is the weekly, so now it's kind of a wait and see. You know, 42.40 would be just an optimal place to hit that again. That's all I can say on that one. Let's take a look at a couple other ones we were looking at last week. Macy's didn't exactly act totally right, but you got a DMZ up here at 32.67 to 33.52. Still not, in my opinion, out of the woods here. This is the daily. So some serious resistance around this area. And I think Macy's, I mean, you know, a lot of these retail brick and mortar type stores, as you know, still don't have a chance in heck. Let's take a look at a couple more. If I can type in the right symbol. Daggone it. Target. All right, when we come back, we're going to look at Target. 66.70 looks like it's printing this morning. So getting close to the whack it again stage. Talk about, as you can see here, waiting for this thing to trace back up. Market come to you type scenario. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Just doing a little recap here. Yeah, is it me or, you know, I mean, Warren Buffett's telling everybody to keep buying stocks and nothing's overpriced. And how many people are saying that? I don't, you know, there's maybe David White's got some numbers that reflect the sentiment right now. He's a guy who puts out some awesome information along with the rest of the hosts on TFNN. But does anybody know what the market sentiment out there is in general? Has anybody got those factors? Maybe they can type it into the den, because, you know, everybody I talk to has just gotten really almost overly exuberant. Is that the word I should use? Nobody's ever used exuberant before, I don't think. But I don't know. You know, I mean, it's almost like things are getting perfectly priced here. So as we look at the S&Ps and we look at this, and, you know, there's something else. I can't believe this, but we've got a new profile that's attempting to appear already up here. Now, this could appear above price action. It could appear below, and it could just kind of be in line with edging up with the former one. But I don't know if there's a huge edge trying to buy this up here, and I didn't say that until recently. I think we're due some kind of like backing and filling stage. And getting a close below 23.51.50 would kind of allow that, but you can't bank on it, and it's something you're going to have to, you know, not be a cowboy and try to get in early on. You're going to have to sell that lower in this case, because you know, it is what it is at this stage. Let's take a look at crude again. Crude's kind of starting to trade up here, kind of against that XLE action, which makes me hesitant to sell the XLE. Remember, targets up top initially 55.06, but a breakout outside on crude, outside this really long profile that's been enforced forever, which is amazing. I think you got to step on the gas above 55.06 on the long side. I think the dollar is probably going to allow that. And what do I mean by that? I mean the dollar, I think, is going to come off. A lot of these commodities will reprice themselves based on crappier dollars. I don't know how else to put that. And the target's 127.28 down below. That's what you're looking at on the dollar. And I love this action here. I know we got kind of faked out last week, right in the middle of the week. It was disturbing, yes. But I love this action, how it's kind of reconfirmed it doesn't want to be above this profile. And I think 127.28 is definitely in order here. I think Tom is wanting this dollar to go down too, which makes me feel pretty good about that trade. Gold, you know the drill there. Just looking for any reason to try to get long this. Here's the 1254. Remember 1248 and a half, 1248.60 down below. That's still a good buy point on this. I think gold personally is 1300 or higher, and the dollar obviously coming off is not going to. Gold's not going to. You know, it's not going to complain about that. 30 years, 10-year, long and strong. Don't see anything wrong with that trade at all, and they've actually broken above daily profiles, both of them, which is awesome. A couple other things that are kind of looking a little crackish on the U.S. stock market. All things considered, everything I said, let's just get a stake in the ground below 2351 and a half first. Let's see. All right, guys. Oh, we're at the end of the show here. Thanks for joining us today. Stay tuned. All the hosts on TFNN all day long. We'll be back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.